What has changed in China's economy from 2013 to 2018? First, nominal GDP fell from double-digit growth to 6.7%. From 2013 to 2015, China made great effort to push forward the reform of economic structures and ushered in a great bull market in 2015. The new economy, represented by P2P and O2O, is booming, and any stock market with these two concepts will rise to the sky.
大众创业，万众创新。
Under the encouragement of national innovation and entrepreneurship, countless young people devote themselves to the mobile internet industry and create a number of the companies such as Didi, Meituan, Mobike, and Qudian. And in the second half of 2015, the stock market bubble burst. The former concept stocks are back to their original shape and collect the LETV and all sorts of concepts. Capital chain is broken, founder Jia Yuting runs away, market value evaporates 90%. Suspected all of these are from the punch scheme. China's growth rate dropped from double digit to 6.7%. The real economy is devastated. Second, the North-South economic gap has widened and the real economy has dropped sharply. Since 2013, the economic growth rate between the south and north of China has started to pull apart, and the growth gap has expanded from 0.6% in 2013 to 1.4% in 2017. In 2017, the GDP of the South has reached 52.5 trillion yuan, accounting for about 61% of the total national GDP, which is highest since the 1980s. For a long time, the discussions on the unbalanced development of China's regional economy has focused on the economic gap between the eastern and western regions. After 2013, the East-West gap has become the North-South gap. The economic imbalance between the North and the South will be the major problem for China's regional economic development for a long time to come. Printing currencies rampantly and more supplies far exceeds the actual economic development speed. China's economic growth relies heavily on investment, which means that it requires major injections of capital. One of the ways to China achieve that is by increasing the money supply, literally printing more currency. In 2011, China has used the excessive money supply to rapidly advance the economy. At the end of 2013, the excess of money is a supply total of 110.65 trillion yuan, 4 times more than 10 years earlier, a clear sign that the government is printing money faster than the economy is expanding. The economic growth cooled to its slowest in 28 years in 2018. Number 4. Government fiscal and tax revenue have bucked the trend, making people's livelihood even more difficult. China's fiscal revenue has been climbing since January 2008, peaking at 2.4 trillion yuan in the first half of 2018, up 16.9% year-on-year. China's national tax revenues, which has been volatile since March 2005, was 14.436 billion yuan in the first 4 quarters of 2017. That was up to 10.7% of the year earlier. Since 1994, the national fiscal and tax revenue has been far higher than the growth rate of the GDP and even higher than the growth rate of the national income. From 1994 to 2017, the proportion of the fiscal revenues in GDP increased from 14.6% to 20.9%. Tax revenue rose to 17.5% of the GDP from 10.5%. Number 5. The growth of foreign trade was weak. Industrial growth and business confidence fell off of a cliff. This year, the turnover rate of the China Trade Fair has dropped by 40%, almost back to the level of 2003. With the shrinking of the transaction amount, the current risk of a collection for the most foreign trade enterprises, order cancellation, payment lag, customers' failure, and other phenomena are generally increased. China's industrial added value has been declining since the 2010. The growth of the Chinese enterprises and entrepreneurs' confidence index is negative month to month. Number 6. Local and foreign currency deposit declined, foreign capital fled, and foreign exchange dried up. China's local and foreign currency deposits were negative 304.665 billion yuan in February 2018. Chinese foreign direct investment was zero in November 2018, straight down. Foreign direct investment is one of the most direct indicator of the foreign investment trends. Number 7. The property market kidnapped 3 generations of the residents' savings. The stock market ransacked the people's wealth. In March, the average price of newly built houses in 100 Chinese cities was 11,303 yuan per square meter, increasing for the 11th consecutive month. Between 1990 and 2013, the increase of house prices in mainland China was highly correlated with the growth rate of currency issuance. Risks to the mainland properties market include the possibility of the bursting bubbles if monetary policy tightens, or if the weaker RMBs devalue the properties market as an asset in the Chinese currency, or if the rising stocks market pulls money out of the property market and into the stock market. On December 28th, the last trading day of 2019, the Shanghai Composite Index plunged nearly a quarter from the start of the year, wiping out 13.2 trillion yuan in the market value between the two markets. According to the latest data from Zhongzheng, the number of investors was 145 million in November 2018. After the market value of 13.2 trillion yuan evaporated, it was shared among each investor. The average investor lost 91,000 yuan. So, will China's economy keep falling in 2019?
Thanks for watching. Please subscribe The Voice of Go Media.